Good afternoon and welcome. I was looking to see who's joining us. Thank you for joining us today. Fred Bates is here, and of course
Hello, how
I'm.
are you?
We're excited to finally be here and ready to close out this phase one. We've had a lot of interest in this project, and this is kind of the last chance to get into this phase. So, uh, we're excited. I know, Fred, you are, how do I say it? I've already said excited 3 times, so I don't want to say it again, but you're
No,
looking forward to getting.
we certainly are. We've, the plans have been submitted. The plans are just about, well, we got our first round of comments back, so we should be done with plan check shortly, and we'll be going in the ground as soon as we hear that. So I'm excited about getting up there. We're going to open up our sales office as soon as we start doing foundation, so we'll be open for pre-sales sometime next month.
Wonderful. Okay, so I think people are now on. I'll just start. So we're going to be talking about new homes in Klamath Falls, Oregon. I'm Kathy Fettke, CEO of Grow Developments, which is the syndication division of Real Wealth. And Fred Bates, well, we'll talk about him in the presentation. Make sure that my mouse, there we go. And the disclaimer, this is not an offer to sell, nor a solicitation of an offer to purchase securities. That offer is made through the private placement memorandum, which you can find at growdevelopments.com. You would click on the invest tab, and that'll take you right to the page where you can download all the offering documents. And so what we're going to go over today is a lot of things that if you've already listened to webinars, we'll be repeating some of that, but also giving updates. And I know some people have been kind of waiting on the sidelines they filled out all the paperwork and they're just ready to wire their money, but they wanted to make sure that it was a go, and we can say that it is. So this is kind of your last chance to get into this part of it. So definitely if you've been on the sidelines waiting to wire your money and you want to do that right away. So we're going to meet the team, why Klamath Falls, business plan and project details, any updates, and then how to subscribe. This offering, we've got a lot of questions about when we're going to do another offering that allows sophisticated investors, which means that you understand the offering, but you're not necessarily a millionaire, you're not an accredited investor. Unfortunately, this project we cannot change. It is filed as a 506c. That's why we can talk about it publicly. But the flip side is we can only allow accredited investors. And that means that you have a net worth of, excuse me, over $1 million, excluding your primary residence. Whoa, sorry, something just came up on my screen that I do not need there. All right. Either you have $1 million net worth, excluding the equity in your primary residence, individually or with a spouse, or you only have to meet one of these. So, or you have an income over $200,000 as an individual, or $300,000 if you're married for each of the prior 2 years, and you expect that to be the same this year. This is also open to investment professionals with a Series 7, Series 65, or Series 82. So if you don't qualify with the first two, go get your license. It'd be a weekend, just kidding. Maybe, I don't know, my nephew did it in a few weeks. All right, so about Fred Bates, over 45 years of experience in real estate development and construction. He's probably the most, I don't know, creative negotiator that I've ever met, and that's why we've really just been able to do so many incredibly cool deals together like this one. He's an engineering graduate of Michigan State and has experience in all aspects of development business, including acquisition, entitlement, design, construction, and finance. We have a long history with Fred, starting back in 2010. Riverscape, we've gone over a lot of these projects, so I don't feel like we have to go over it again, but just if you're new, be sure to listen to the past webinars so that you can see all of the deals that we've done together and still doing. We've got this one, BPI Prescott Ranch in Bozeman, Montana, still in action. And I just keep hearing people moving to Montana, Fred, so you were way ahead of the curve on that. When you brought that project to us, I really was like, where is this? And how could we sell so many homes there? But that project's going pretty well.
That project's great. I mean, it's been great since we opened the doors on it. We had a slight slowdown during COVID, not so much due to demand, but due to our inability, supply line delays and things like that. So we're back going full bore again. And as you know, this month we returned another 20%. So sometime in the next quarter or so, we'll be paying off the balance of the capital, and we'll start paying back, or we'll start paying the preferred return. So very good project. And then we've got close to 6 more years of profits after that. So should be a very good project.
Yeah, you'd always kind of said this is going to be like coupon clipping. Once you get your capital back, you're just going to be getting profits after that for some time. So I think everybody's looking forward to that. All right. Again, just an overview. I've gone over this so many times, and I know so many of you know these projects. If you don't, please go listen to some of the other webinars so that you can get the history on the different projects that we've done together. But let's focus on this one, why Klamath Falls. Again, this is one that's really it's not on the headline news, right? It's the hottest market to invest in. But we know that nearby areas have been. I mean, Bend, Oregon has been on the map for a while as a really high growth market. We have friends who bought there just, 5 years ago, and their property has doubled. It's a beautiful area. Medford, Ashland, Klamath Falls is just over the border. But I'll hand this to you, Fred. Why Klamath Falls?
Well, 2 reasons. I think I told you our first call was from the city telling us that the Air Force base was growing and that the Air Force themselves were going to be adding about 300 new people. They were taking on the F-35. They right now fly the F-15. They have the Top Gun program up there. And the city themselves have about 2,000 to 3,000 new jobs coming in over the next 3 to 5 years. And they were looking for housing. They saw our project in Reno and thought we might be a good fit. And of course, we went up and we looked at it. The property is superior. You've seen pictures of the property. It's far superior. The property is finished. Now, they didn't call us specifically for this property. They called us to come and build homes up in Klamath Falls. And when we went looking for property, this was one that came up. And it's the negotiating we did on this. I mean, it's far superior buy from our perspective. We're buying it way below market. The terms on it are terms that I never thought we'd ever see. And we feel comfortable that in the preceding years, they would have probably an average of about 150 permits a year that they would pull. And we're asking, all we want to do is do this over a 5-year period. So 3 a month or 36 permits a year. We don't think we'll have any problem with it. They have a move-up market there that I think can handle our demands. And they're getting with the new demands that they're going to be having with the new jobs. I think we could complete the project in less time than that. But right now we're shooting for 3 a month.
Great. Okay. And the area is growing, it's not Austin, but it is growing. And that's kind of why people love it, is it's not Austin, it's growing at a sustainable pace.
Well,
but
yeah, that's one of the other things. I mean, we're getting some of the California people that are leaving, in our Denver project, our Reno project, it was 90% Californians that ended up buying in there. Retirees moving out for tax purposes. Here they're moving up. They can get a whole lot more house for a lot less. Good quality of life, no sales tax.
Yeah. Yeah. And given how many LLCs I have at this point, I think it might be time for me to consider that with 800 a pop per year. My goodness. Okay. So yeah, the area is expanding, and obviously the city of Klamath Falls is aware of the need for new housing. It's not like there's a lot of national builders coming into Klamath Falls to bring on that new supply. So these small towns are the ones that are hurting the most from this housing shortage, because they're not on the map for the national builders. There's just a few, I don't know what, local builders that bring on a few a year.
That's all they have is the homes that they build are onesie twosies. There's no production builder up there. When we went into Bozeman, as you know, it was primarily small builders doing onesie twosies, and there is nobody in the Bozeman area that can build a house to compete with ours. Any house that would be close to competing with ours would be $200,000 more than what ours is priced at. We're going to run into the same thing here. We couldn't find anybody, any contractors up there that could build for the prices that we wanted to build our houses at. They're substantially higher than what we want to build them at. We're taking people from California and going up there. All of our subcontractors are coming out of California, out of the Sacramento area, and we will be building houses up there for substantially less than anything that's going up right now.
That's great. All right, so the business plan is to build high-end homes to retail buyers. So these are not rentals. If you'll explain the option agreement, well, first let's start with the risk in development. And I went over this at the live event, and I also think we talked about it in the last webinar. But certainly development comes with risk. And when you buy raw land, the first step is entitling it. The next step is, you tell us, like, what do you do with raw land?
Well, as you know, when we're buying raw land, and you've been involved with us on several properties where we've done that, we're at maximum risk. We don't know what we're going to be able to get on that property. Typically, we do a substantial due diligence before we bring it to you. That would be geotechnical, soils, phase one, surveys, and so on and so forth. Before we bring it to you, we've also had preliminary talks with the city, but that doesn't guarantee anything. As you know, when we were doing the Pleasanton project, we were all teed up, had 5 votes when we went into the city council, and it almost turned on us. People from the local residents showed up in opposition to the project, and the city council looked like they were going to go from 5-0 voting for us to 0-5, and we were able to save it at the last minute. But that's the risk you take in development. It's an all or nothing thing when you go to the city. It's totally discretionary on their part as to whether they're going to approve you or not. And probably more than 50% of the projects that go to the city are denied. And so there's a great deal of risk, and we rank it that way. In this particular case, we have all of the approvals. So we're approved for the 156 lots. More importantly than that, though, all of the improvements, the site improvements, are in place. The roads, streets, curbs, gutters, all the utilities, the underground utilities are in place, and the lots are ready for us to go in and build on. And then last but not least, the way we're buying it removes another level of risk, and that is we only pay for these lots after we have a third-party buyer to buy the home. So we're going to go in, we're going to build on the seller's lots. We will sell it to a buyer, and at that time, that's when we close on the lot. The lot that we're buying, we're paying $60,000 a lot for. They're half-acre minimum lots, many of them over an acre, and many of them with views of the lake. And it would cost us $60,000 to $90,000, maybe as high as $125,000 to put those site improvements in. So we're vastly below market for this type of product. Now, the question is, well, how did we get that in the first place? How did we arrange such terms? The seller is an ag person, a farmer, who bought the property around 2008, 2009. It had been a developer that had gone under during COVID. I mean, not during COVID, during the Depression, and sold out cheap. So as an ag person, he's not really a real estate guy. He's been doing some lot sales, but he found out over the years that most of the people want to buy a house. They don't want to buy a lot, go hire an architect, wait a year to get plans through plan approval, and wait a year or two to get a contractor underway and build a house. And so you're 3 to 5 years before you get to move into your house. So it worked out well for us. We were able to get great terms on his property, get great property, and I think it's going to be one of our best projects in the end. This is a gated community with lake views.
Yeah, yeah, we're having the same problem in our Utah project of people don't want to buy the lot, they want to buy the house.
Yes.
But you got to
Well,
have the financing to do that, and that's what we're doing here. So normally when we would be raising money for a project, it would go to all that stuff of bringing in, buying the land, putting in the roads, the utilities, getting those lots finished, and it would be 3 to 4 years before we could start building. So all of that has been bypassed to where we get to the good stuff now. We get to the profits now, where we get to build as soon as, right away, as soon as we
I mean,
close. Yeah.
typically a project like this, Kathy, our raise would be to try and keep the raise down. We'd be doing it in phases, and we'd be rolling the money back in to the project, to future phases and whatnot. In this particular case, we have raised our capital, but every time we sell a house, we make a profit. We're able to distribute it. We're not saving it for phase two takedown or anything like that. We're able to distribute it. We're not going to save it for roads. It's just for construction. As you know, in the original performa, I performed, thought we would need about $10 million to do this. And as we've got our bids in, we're down to, we cut our raise to $8 million. So I think that augments well. It means a quicker turnaround for investors and a better return.
Yeah, so to be clear, it says a 5-year hold, but distributions will begin after about a year. So that's unusual in any development project. It's sometimes 5 years or 10 years, like our Florida one, before people get a return of capital. So that's not what we're talking about here. It's a 5-year term that we think it'll take to sell these houses. But as soon as houses are sold, that money gets distributed. So it really starts in basically beginning of year 2.
We will be going into the ground sometime in April. As soon as we get our plans through plan check, we'll pull permits and go into the ground and start foundations. And it takes us about 6 months to build a house. We have people on a wait list now, and we will be opening pre-sales as soon as we start pouring foundations. So we think we will have closings 6 to 8 months from today.
Yeah, so the funds that we're raising, this is another big benefit, is we're not getting construction financing or financing for horizontal construction where you're having to make payments when you haven't made sales. It's a really tough thing. Instead, the money that we're raising is going to building these model homes and some spec homes, and we're eliminating another risk, which is the bank. So again, just another this is about as conservative as it gets for construction.
And I've had a few people call because they were curious about this whole buy, and they were wondering how we would negotiate something like this. How would somebody be willing to sell property this way, and were we secure in this investment? And of course, I've had our attorney look it over. Of course, they did the contract on it. They're very conservative, and they thought it would no problem. And I also had another attorney look at it, and they said the same thing, that there's nobody, we've got a recorded contract option on the property. There's nobody can do anything with it. So we feel very secure in this.
Yeah, so it's an exciting, different kind of thing. I think, we've all been through, not all of us, but a lot of us, through the pain of horizontal development, and that pain is not here in this project. Okay, so preferred return is 12.5%. What that means is that the investors get their capital back first through profits. Profits go straight to returning capital. Then once that's paid off, then investors get a 12.5%. Let me try that again. 12.5% preferred return. You say that 5 times on the money while it's held up, while you don't have it. So once it's returned, of course, you don't get a 12.5% on money that's not tied up. But on the time that it was, you do. So that gets paid next. So your capital back, then the 12.5% preferred return before Fred and I get a piece of the profit. So you get your capital, you get your preferred return, and then there's the profit split in addition to that of 25% pro rata. And again, you expect this project to be finished in 5 years, but beginning to distribute at the beginning of year 2. All right, next slide. So again, 156 shovel-ready finished lots. So this is the fun part. This is the fun part. It's not the deep, dirty work. You know, I've gone to the sites, Fred, where it's big machines and big sewer pipes and all that. We're not doing any of that.
Not doing any of it. We're just going in. I mean, it's like a project that we bought raw land. We're like 2 years down the road because we've got the entitlements, we've got all the infrastructure in place, and now we're starting to pour foundation. So, and our efforts at the city's been minimal. All we had to do was submit our plans for plan check. That's been done. And like I say, we'll have those back this month, and we'll go right into the ground.
So 156 shovel-ready finished lots. We will build them as fast as people want them. The average lot size is in excess of 0.64 acres. It's forested, rolling hills, beautiful, with many of the lots looking over the lake. It's really a dream. We've had so many investors say, could we also buy one? And yes, of course you can. Located in a gated community. The entry features include a gatehouse, falls, and a small lake. Here's some photos.
The property is gorgeous. Yes, just undulating property, forest, lake.
And it's already started. You know, he did sell some homes. These are an example of what's there.
Right, and I started to say, and I forgot to finish it, was that we have a list of people that are interested in us or in buying homes from us, but we also have a list of people that have bought lots there that haven't built and would like us to buy or build their home. Now, we don't think we'll do that. I mean, they can buy one of ours, and if they want to sell us their lot at some type of a good price, we might be interested in that, but we're not interested in becoming a contractor for anybody else. But that's exactly what's going on. And like I said, we couldn't find any contractors up there, any subs that would build at a price that we would use them. So the cost to build up there is substantially higher than what we're going to be building for.
And because you're going to be bringing in your teams.
Our whole team's coming up from California, from Sacramento, California. I mean, everybody from guys that are pouring foundations to guys that are doing framing to roofers, electricians, plumbers, every aspect of it's coming up.
This is the property, and
yes,
this is town.
Right. It's in Klamath Falls, but you can see it's very rural in setting and has great views of the lake. The backside of it has great views of the lake.
Okay. So again, we already went over this, but they're development ready finished lots. When the city wanted you to come up and build, oh my God. Go ahead, Fred, you can read this slide.
Well, yeah.
I'm allergic to something out there. Spring.
So when we went up and we were doing our comp study and we went around and we looked at lots, there wasn't a lot to look at, but it was everything from unfinished raw land that people would call a lot to fully developed lots that included roadway access and or utilities and whatnot. Prices ranged anywhere from $29,500 for a small lot at the end of some road with dirt road with no utilities to it, to $185,000 for a nice lot that you might want to build on. Our properties, he's got comps in the over $100,000 that he sold lots for, and we're buying them for $60,000. Like I say, the replacement cost of these lots, if you were to put land and improvements together, it would probably be $180,000 just to buy the land and do the improvements on it. We feel we're under market on the lots, and then of course, if we're building for less than anybody else can, we should be very favorable in the marketplace there. And like I said, we're only looking for 36 sales a year. Now, if we do more, that's great too. We can build faster. But they're doing 150 homes a year, pulling 150 permits a year right now. Should be easiest for us to snag our 36. But more importantly, with the growth they're having, they will be pulling several 100 permits a year, 300-400 permits a year to fulfill the demands of these 2,000 to 3,000 new jobs that are coming in.
Sorry about that. What's the risk if we don't sell them as quickly?
The only risk is to you and I because we pay 12.5% on that capital. And typically our investors don't mind if a project goes a little long because they're earning 12.5% on it. But it does make the profit smaller typically. But there's another side to it too. For example, in Bozeman, we're not behind schedule, so it's not taking longer. But over the years, we've been in it for, I think, 4 years of building cycle, or 3.5 years, a bit 3 years of building cycle maybe. But we've seen a great deal of appreciation from where we perform it to what we're selling homes for now. So where we're maybe making $185,000 to $100,000 profit on a house, we're now making $100,000 to $150,000, $60,000 on a house.
Yeah. Okay. And to just be clear, profit, like it's all profit once a house sells, and again, that profit goes to pay back the capital first. Then the next profit goes towards the preferred return, and then what Fred meant was the remaining profit, what's left after that, is split. So if the project goes longer, the investors continue to get that 12.5% preferred return per year. And it just takes away from the very end profit, which is where Fred and I get paid. So we don't want it to go long, but there's a chance it could. But I want, just in case who knows? So after COVID, we really can't predict the future.
Yeah, you'll see when we do the pro forma, we've got a nice profit margin in here. All that would have to erode before it would even get into their preferred return. So
yeah. Okay. So this is the product type. You, as you said here, you took it from the Bozeman project that's been selling really well there. And so the design's already done and proven.
So this is, I think, a Plan 3 in Bozeman, and you can see we've added a 3-car garage to it. So that'll be the product, and we've got the garage turned in different directions. We've got bonus rooms on these things. We're going to be offering a detached garage with a accessory dwelling unit. So there'll be a lot of options that people can choose up there.
Great. All right, keep clicking. There we go.
Yeah, this was the product that we were doing up in Bozeman pretty much. So you can see these are all 2-car garages and whatnot. We will enhance that.
Okay. Target buyers. As you said, there's 80 to 120 home building permits pulled per year. We think we have superior lots and the best development with other superior product compared to other homes being built in the market. And we believe we'll be able to attract high-end buyers like the National Guard members, move-up buyers, and relocating Californians, escaping taxes and LLC fees.
Another question we've gotten from a lot of people is that, do we really think these people that come up and fly for the military will be able to afford these houses? And like the Colonel told me, these people have houses wherever they're coming from, and they're coming from more expensive markets than this typically. And so they're coming in with substantial equity, and they do get house subsidies from the military. So he said, no worries.
Oh, that's great. I have to do like 3 clicks before it goes. So sorry about that. It's taking so long. Yeah, comparable properties. What did you see when there?
Well, so there was a lot of this stuff going on up there, but so this would be comparable in size and scope. Our inside finishes are typically better than these, but this would be, $950,000 to $1.2 million. And they had homes up there running from $610,000 to $950,000. Now, it's small in comparison to the total turn of homes up there. So the housing average sales price is $380,000 or something like that. But you would remember when we went into Belgrade up in Bozeman, the average home sales price was $280,000. Thanks to us, now it's close to $500,000.
Okay, so the minimum investment is $50,000. Total offering max is $10 million, but we only need 8. Minimum raise 4 million and open to accredited investors only. Use of proceeds, as we said, will be primarily to build the model complex, to finance the construction of the initial 18 houses on the property, and to pay costs associated with the purchase price and other fees and expenses for the option. With respect to the initial 18 lots, costs associated with setting up maintenance and governance of the company and offering expenses, design, architectural, and engineering associated with the houses, and the construction of the model home complex, which we said, and the initial homes for sale. And then, of course, marketing of those homes.
And all that's happening as we speak. I mean, I've been taking care of that, so.
Yeah. Yeah, it's not like you've been working on it consistently.
Right.
All right, so here's the analysis. I think you could see my pointer. Some people were confused about this, but these different columns are the different homes that will be offered. So you've got an 1,800 square foot home, a 2,100 square foot, 2,600, and 2,800, 39 of each for a total of 156. Building costs are here, which is amazing. Base sales price, 575 up to 700. Then there's the options and upgrades, lot premiums, and then sales incentives and so forth. So the net sales revenue is down here. Again, it's still those columns for the different properties, and you'll see all the different fees and costs. So total building costs. And then the net profit on the different types of homes.
Cost of sales, marketing, cost of operation, and then of course your net profit per house. And net profit is about 17 million, and that's what I say. There's a big cushion in this before there's any would be any erosion of their preferred return.
Yeah, Fred doesn't like skimpy projects, right? So they have to have a nice big back end.
It takes as much effort to do a bad project as it does to do a good one. So
I think it takes more effort on the bad one.
true.
So it's interesting that the smaller house has a higher profit.
It's what it is that it's smaller house, but it costs us every bit as much time and effort to build that house. If you look at the price in comparison to everything, I mean, it makes sense. If you go back up, you can see the sales price, they're properly aligned and whatnot. And it just comes to that. But yeah, now typically the bigger house will have more upgrades, and so we'll make it substantial on the upgrades.
Oh, okay, on the upgrades. Yeah, that's usually where more profit is made. All right, so this is the pro forma with the 10 million. So I think we're just going to skip that because this is probably a more
really doing right now. Yes.
You can see the gross profit at 17 million, revenue from sales 102 million, land purchase would be 9.8, construction cost of 63 million, total land and construction 73. You've got the sales and marketing commissions, marketing, model complex, construction G&A, LP, setup costs for grow and Bates properties. And then, so you've got the cost of money, the investor preferred return, 12.5% at 1.6 million to a net profit of 15.5. After that, the investors would get another 25% or 3.8 million. Grow will get 12 and the contractor 12, Bates properties 50. So this is high, right, compared to other projects. But you could see they also don't give as high a preferred return. I've never seen it.
What's that?
I think we give a much higher preferred return than other projects that I've seen. Usually it's 8%.
Right.
Yeah. So it's kind of like the investors getting paid on the front end and then out of the remaining profits.
Right.
But it also takes, the expertise of someone who's done this many times. Okay.
That last sheet you showed, I think, was a cash flow,
Okay, let's go back there.
and people can kind of look at that and digest it. But it gives you an idea that I think in the 34th month or something like that is where we would have all of their capital paid. Then for the next 4 or 5 months or 6 months, we would be paying preferred return, and then the rest of it's all profit. We start making a return of capital, looks like in the 8th month. So
Okay, great.
very rare.
Yes. So we started raising sort of the end of November. Funding minimum is April, so we're almost there, guys. So I know a lot of you have been just sort of waiting
Well,
to wire your funds in.
I think we're
Oh,
down to minimum for phase 1, and then after that, phase 2 is open and their money can come in and start earning interest right away. So I think we're down to just a few. So if you want to get in now. We got begin building spring of 2024, and that will be April. And we think we'll start returning capital. Of course, we show it in here conservatively, late 24, early 25, but it'll be in probably 2025, in that it'll be about 8 months out. And then the whole 5+ years, and that's all subject to if we can sell 3 a month, it would be a 5-year project. If we sell more than that, it'll be less. If it takes a little longer, if we sell less than that, it'll take a little bit longer. But you'll start getting capital back with the first sales.
So we went over this a bunch, but here it is in writing that the way the distributions work is as soon as homes are built and sold, there's profit, and that profit is distributed almost entirely to the investors until their capital is back, besides some fees that have been paid, to run operations. Second, investor members will receive their preferred return, which is at 12.5%, non-compounded, until their money is paid back. And then finally, after capital is returned and the 12.5% preferred return annually, then there's a 25% of the remaining profit to investors. The fees that I mentioned are managers reimbursed for professional fees. Bates Properties Reno will receive an assignment fee of $500,000 for the option for coming up with that great deal.
The people are wondering where that shows up in our pro forma. It's in the land cost.
Okay. Grow Management receives $50,000 for the startup fees for the work that we do in getting it going. Bates Properties Reno and Grow Management will receive a month management fee capped at 2% of gross revenue. Grow Management will receive $1,000 per home lot sold, and Fred Bates Jr. will receive a monthly fee to cover construction and site overhead capped at 3%. Grow Management or an affiliate will receive $1,000 per subscription agreement, and BPR and Grow Developments and Fred Bates will also receive profit share as described in the PPM that we already went over with you. Potential risks, like we talked about, a lot of this has been de-risked. The entitlement risk is gone. It's already approved. The horizontal development, roads, utilities already in. That is a massive risk that is no longer there. It's taken care of. But you've got supply chain issues potentially. That's much less of an issue than it was during COVID.
It is much less. It was interesting, though. I don't know if you saw the bridge come down in.
Oh, yeah, that's awful. So sad.
I don't know what effects that'll have on us out here in the West, but it very likely could cause some delays in some materials. I'm like refrigerators, other appliances, stoves, ovens, dishwashers. But
so you just never know.
Construction delays. That right now would be down to weather, unless we have another COVID bout. But enforcement of option agreement, we put that in there so that we would make sure that we discussed it. But again, we've had it looked at by numerous attorneys, and they all agree that it would be very penal on the seller if he didn't honor the option. So they don't think there could be any problem with that. economic conditions, we can't control that, but we do know one thing, Kathy, that being in business on a regular basis, taking the ups and downs is probably the only way you're going to make a profit. If you try to hit the ups and avoid the downs, it'll happen just the opposite way. You'll come in a good market, but by then it's gone. So the good thing about this is the market's healthy right now, and we can go right into the ground. We don't have a 2-year wait to get through entitlement and development.
Okay. Reporting. We will be reporting business activities, including construction projects, progress, contracts, sales, status of the development, quarterly unaudited financials. Audited would just be too expensive and take away from your profit. Information reasonably necessary for the preparation of income tax returns annually, including K-1s. Other such periodic reporting as provided for in the operating agreement. And you all know Ann Triplett and Kathy McBride now, so they can help you with any questions you may have on how the portal works at growdevelopments.com, how to download the documents, fill them out. Any questions you have, you can reach out. Syndications at growdevelopments.com. Okay, and I thought this would be a good time to bring in Paul, Paul, if you want to be on camera, you can click that little camera green button at the top of your GoToWebinar control panel. But I do want you to know that we have hired a new syndication manager, and he may or may not be able to bring his camera on. There he is. Hey, Paul.
How are you?
Good, good. So we're really excited that Grow Developments has brought in Paul, who's got an enormous amount of experience in construction, mainly apartments, but some other things too, right?
Yeah, I had background in real estate for 14 years now, so excited to work on this project. And yeah, Fred, it's very unique negotiating structure that you got accomplished here. So hats off to you on that.
Yeah, it was fun. It was fun to get Paul's feedback because it is rare, and it's going to be fun for you, Paul, to work closely with Fred to see how he does these things, because he really is a fabulous negotiator. It's incredible. So Paul, I'm just curious, with your experience as a real estate broker for some time,
yeah, broker and developer. So
developer, when you saw this project, the comments were, wow, this is a great deal. So what were your initial thoughts?
yeah, well, it's great. The price of not buying raw land, you're buying development ready shovel land, eliminates a ton of risk. Obviously the cost of it being finished, you don't have to come in and finish it, saving a lot of money. And then the structure of the deal too, of not having to close, how you allocate those funds changes the whole dynamic of the deal too. And then the fact that the city was requesting housing too, it seems like right off the bat a great project, as my first project coming in to be a part of. So look forward. I'll probably be reaching out to some people as well, just making some calls, following up. So just want to introduce myself. If you hear from me, that's what I'm calling about this project.
Great. Somebody asked what the deadline is for this first phase, and it's April
19th.
19th. Thank you. I was like, it's either 9th or 19th. So
I think we're almost there though. So
yeah,
if you can get your paperwork in now, sooner the better.
Yeah,
we'll be off and running.
Yeah, and then we can also start sooner too. I know some people were waiting for that deadline to come, and sooner is, well, I know some people were waiting for their treasuries to come due at the end of March. So as soon as that happens, they'll be sending their funds in. But as soon as that, that phase 1 comes in, we can get started. And but it does take a little time for those of you who haven't started your paperwork yet. So definitely want to get that started. You can go to growdevelopments.com again to get that. Click on the Invest tab, and that will take you to the project. All right. Well, Paul, thank you. Some of you will be hearing from Paul. He'll be calling for a follow-up. Thank you, Fred, again, for bringing us such a great project and for continue to move it forward.
Thank you. Thank you for your time. Nice to see you, Paul.
Yep, good seeing you.
Always good to
All
see you, Kathy.
Let me just check. Oh, some questions did come in.
Oh,
Let's see. It's in the DI. Okay, I'm planning to invest and am in communication. Wonderful. Great. All right. Thank you. Anyone? Paul will follow up with any questions that I didn't answer, but we got to go. All right. Have a great day, everyone. Thank you.
thank you. Bye-bye.
Bye-bye.